Katie Braden here at the Morningstar Investment Conference in Chicago. And if you're watching this from home, there is still time to join us and grab a digital pass to attend all the incredible sessions that are going on here. Tons of education credit and sessions like Amy Arnott just presented on Morningstar's new Robo Advisor Landscape. Super hot topic, Amy. And you guys actually just had a research paper out in April that has caught a lot of attention. So for those that haven't seen that research yet on the U.S. Robo Advisor Landscape, what are some of those highlights?
Sure. So we looked at about 20 different providers of digital investment advice in the United States. So these are companies that are typically targeting individual investors with lower wealth levels who are newer to investing. And instead of a traditional financial advisor where you're sitting down with an advisor and talking about your goals and your portfolio, your investment progress, they are handling things more digitally. So you're filling out a survey online and answering a series of questions, which then they will use to kind of map you into one of at least 5 different portfolios with 5 different risk levels. And they are managing your portfolio algorithmically. And also, a lot of these providers have tools that you can use to track your progress over time or to track multiple goals, things like that. So it's still a relatively small area in terms of invested assets. It's about maybe 800 billion or so in the US, but it has been growing at a pretty rapid rate.
And were you guys really looking at kind of the direct to consumer, or were you also looking at, because a lot of financial advisors will be watching this and thinking about, okay, how can they maybe work collaboratively with these robo-advisor platforms?
Right. So our research focused specifically on platforms that are targeting individuals, but there has been a lot of overlap between digital platforms and human financial advice. So we're seeing more and more crossover there. And there's also seems to be a need where a lot of people don't want an exclusively digital experience. They do want to be able to talk to someone if they have questions, or especially if we're in a very volatile market environment like we've seen lately.
Yeah.
It can be reassuring to be able to call someone and just find out what's going on, what does this mean for my portfolio, things like that.
Yeah. Fabulous. And you also got additional research. It's what you do, and on diversification.
Right.
So what tell us about that research?
Right. So this is a paper that we published at the beginning of March, and we're planning to do annual updates. So we call it the diversification landscape, and it looks at performance of different asset classes, how correlations have changed over time, and what that means for both advisors and individuals who are trying to put together a diversified portfolio.
And is that still sticking with sort of your more traditional diversification among asset classes, or is it also bringing in alternatives and other more unique NFTs and whatnot?
Yeah, so we looked at many different types of asset classes, including things like cryptocurrency and alternatives.
Yeah.
And we also looked at more traditional types of diversified portfolios, like a lot of people have probably heard of the 60-40 portfolio, which is your very basic mix of domestic stocks and domestic bonds, which actually performed very well over the past 10 or 20 years. But now that we're in an environment where interest rates are increasing, inflation is much higher than it had been, it's a much more challenging environment for that basic 60-40 portfolio. So as part of the paper, we also looked at some other periods of rising interest rates and higher inflation to see kind of how different types of portfolios performed during those environments.
So, I mean, you just touched on a lot of things that are, a little bit volatile in the world right now. So
Right.
again, with advisors watching and knowing what their clients are reaching out for and different, asset classes, diversification, even platforms that clients might be considering. Any recommendations for what advisors should be keeping top of mind during this time with their clients right now?
I think that we're really in a period of change in terms of the fundamental environment for interest rates and inflation. So I think the more advisors can do to help investors understand what's going on in the market, and also provide some reassurance that even though the market is very difficult right now and they're seeing headlines every day with stocks going down, bonds going down, that that doesn't mean it's time to panic, and you still have to stay focused on your goals and making sure you have a portfolio that is set up to help you meet those goals.
Fabulous. Thank you, Amy. And really what I'm hearing you say is it gets down to communication.
Exactly.
They're hearing news headlines every day. That's a form of communication. So as advisors, make sure that you're helping to control the conversation the clients are hearing and reassuring them. So if you haven't seen that research, make sure to go check it out. Lots of recent papers coming out. You said you'll be updating, definitely doing more research going forward. And again, this is Katie Braden and Amy Arnott from the Morningstar Investment Conference.